Well, good morning. How's everybody doing? Hey, Brenda. Let me know if you would that you can hear me loud and clear. Hello, Kevin. I'm assuming since you're all responding, you can hear me. Good. It's usually a telltale sign. Oh, got all this stuff going here. How's everybody's fourth? Nobody party too hard? Obviously, you're here. Hello, Helen. You guys are all still hungover? You don't know how your fourth was? I'm not, but I haven't had enough coffee yet today, so I'm getting there. Well, welcome out to Trading Coaches Playbook. If you're new here, if we haven't met, my name is Tony Benson. I'll be your guide for a little bit. Realized I forgot to turn that off again. I've been doing that a lot lately. Turn this thing off. All right, here we go. Don't bother me anymore. They're such charging. Didn't go hard enough, huh? We went just right this year. Last couple of years, well, last year wasn't too bad. The year before we went pretty hard, but yeah, we have our entire neighborhood here. It's a lot of military. I'm not that far from JBLM, so there's a lot of military that lives in my neighborhood. So they know how to do it up, that's for sure. And then we're not that far from downtown, so there's sometimes a show there, but there's lots of people, so we have a good show. It's almost like a professional type of show around here. So it's just hit and miss. And my neighbor got some dynamite apparently. Whew. I was like, when are you gonna let that out? Whenever I feel like it. So we're just sitting there and ooh, huge explosion, like rattles everything. It was cool, but it was crazy. So, but let's get to it. I am not a registered broker-dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. So here's what we have coming up. We got premium online workshops, the Inner Circle, July 8th and 15th at 7 p.m. Eastern Time. Mastermind Group is the 9th and 16th at 8 p.m. Eastern Time. Mastering the Trade is July 8th at 8. Trade You, the 15th and the 31st at 8. And then Monster Market Movers is July 24th, also at 8. We like that time slot. Seems to be most convenient too, right? Power Option Plays is Monday and Thursday. And then Cover Call Explorer with Trip on Thursday. The free online workshops, Power Hours, every Monday at noon. Trading Coaches Playbook, this one also, but every Friday at noon. And then Mastering the Zero Date to Expiration options, July 9th, 10th, 17th, 18th. And you see the time frames there. So, and then E-Mini Think Tank with Brandon on Monday, Wednesday, and Thursday. So that's everything that is coming up. And then you can find us on all the social media sites, of course. And then if you like my style, we've all got different trading styles, different risk tolerances, all that stuff, right? Trying to get my neighbor, he keeps asking, and I keep saying, come over. He finally did last week. And I told him he keeps doing this. He keeps chasing the shiny objects. Guys at work are like this and that. Oh, he missed that video. And da-da-da. He's talking about everything he missed. And it's like, first thing you got to do is figure out your trading style. Are you short term? Are you long term? You can do this. You can do this. You got to figure out, because he's talking about everybody's watching all these guys on YouTube. And it's like, okay. But it's easy. And that kind of goes into the topic of today is, first of all, figure out what your trading style is. And then second of all, stop looking in the rearview mirror, right? But if we haven't met, Patterns and Flashes is a tool I created years ago. Actually, geez, it's been almost 15 years ago now. It's all about technical analysis, right? It's all about recognizing patterns, knowing how to trade the patterns, what to do with the patterns. So if that's something you're interested in, thank you, Andrew. He just dropped you always get a free trial, right? 2 weeks free trial, so you can kick the tires and make sure it's something that is good for you. Weekly Whispers is another one we launched a year and a half ago. It's basically just all my research. I go every Thursday night. I go and look, unless it's 4th of July. I go hunting for candidates. I go looking for patterns. About 300 to 400 stocks I typically look through. I find patterns, And then I narrow it down basically to the cream of the crop, the ones that look the best, that have the most, what looks like to be the most potential, right? So, and then I do a recorded video that's usually about an hour or so, give or take, about, we look at the macro. It's basically just all my research and what I'm looking at, what I'm thinking, and the trades that I'm looking to do in the next week. So that's my style of trading, since we're talking a little bit about that, is hunting for patterns, finding patterns, and then creating a plan, and then just executing the trades. And that's all I do for that week. The next week I start over. So I don't do it every day. I used to. It's just it's too much work. It takes 3 to 4 hours to get it all done, to do the research, to go through it. And then realistically, the patterns, since most of the patterns I'm using are Western patterns, right? They're longer term, the triangles, the head and shoulders, they don't change every day. So it's not one of those things you have to go hunting every day. So I do once a week. And then the rest of the other mornings, I just manage the trades. So it's mostly hands off, and it's not super time intensive, but it's been effective for me. So, and the small accounts, big returns, that's what I did 2 or 3 years ago, I think. It's a 2-hour class. It's recorded, so you can go buy it, watch it again as much as you want. It'll be dumped into your My Account page and watch it over and over and over again if you want. But it's all about how to, different techniques and things you can do when you're starting with a smaller account, obviously. So, and then we should add to this list, since Amelia retired essentially, Trade Watch alerts. I'm now doing those as well. So that's been fun. I'm kind of getting in my groove. It's been a couple of weeks now. I'm getting comfortable with how to do it the way. So what I'm looking for, I don't know, getting comfortable in doing that on a daily basis, right? So it takes a little bit of time to get used to something when you're doing something different and new. So it was, for the first week or so, it was taking me about an hour. Now I've gotten kind of a little system, I can't think of that word. Process. I got a process. So that's a good thing to have when you're trading, right? I think we talked about that last time, talking about a little about routines, having a routine and sticking to it. It's a good thing, especially when trading, is to get into that kind of habitual pattern that way it's always the same. Just like with, I refer to sports all the time. Baseball players, basketball players, they have a routine. You're doing the same thing every single time, right? You're just consistently doing it. And that's just the best way to do things. So, but here's what we're going to talk about today. One thing that's real easy to do when it comes to trading is to get into that fairy tale mindset, right? And I've been there many times. I still do it, right? I mean, we all do. It's easy to get there, right? Because hindsight is 20/20. It's always easy to see behind us what took place. That's one thing I was talking to my neighbor about. It's like, yeah, these guys tell you, oh yeah, if you would have just done this, if you would have done this, woulda, shoulda, coulda. Pay attention to your words and your thoughts. And when you start to use the words woulda, coulda, or shoulda, then catch yourself and be like, wait a minute. Okay. And this happened probably a year ago. Excuse me. I was on Benzinga with Spencer. Great guy. He's no longer there. But yeah, we do, I think, 30 minutes once a week in the morning time. We'll just talk about my research and what I was looking at. And he stopped me one time. He goes, well, why wouldn't you just do this and do this and do that and get in here and then get out there? And I chuckled. This thought came up, and I took the chart and I backed it up to where he was saying get in. So I was like, so you're saying I should have gotten in here. So you back up the chart and make everything on the right side disappear. I said, okay, now go back to that spot right there, not knowing what came over the last 2 or 3 weeks. This is the spot you're saying to enter, right? Now look at that chart right there and you tell me, is that a place you would pull the trigger? Oh, good point. Like, well, it's easy to look back once it's already happened and say, well, you should have gotten in here, should have gotten in there, right? But that's not the way trading is. That's not reality, right? That's a fairy tale. Because, excuse me, that cough's coming back. The hard part is that you get that into your mindset and you go, well, if the next time, well, really? The next time you're going to be in the same situation. You're going to see something, not know what's coming next, and you have to make a decision based on what you see in front of you, not what you already know is taking place, because you don't know what's going to take place, because we don't have a crystal ball. The challenge that most of us have, especially when we start, until you get rid of this, or at least I don't know, I couldn't say get rid of, but gain control over this fairy tale mindset, is that it influences our next decision, right? Some of the most common ones, especially when you start, which if you don't know me, I teach purely from experience. Everything I talk about, I've done before, right? You get into a stock, you say, oh, it's going to bounce right here. Here's support. I'm going to buy it here. I'm going to stop out here. Here's my target. And it almost immediately drops, right? It breaks your stop, gets to your stop, almost the stop. You say, okay, but hold on. Just wait one more day. Wait just a little bit more. I'll move the stop down. Right. And then you keep moving it down. You keep moving it down, keep moving it down. And next thing you know, your options expire worthless. And you're like, that was fun. Let's go do it again. And the reality is that you do it again, right? But what happens the next time is you get into the trade, you say, okay, I'm going to stop out here. And then self-doubt starts to creep in. You go, well, wait a minute. Last time I didn't stop out there. What makes you believe that you're going to stop out here? I mean, a lot of it is just being honest with yourself, having integrity with yourself. As I said, I was going to stop out, but I didn't. And so now all of a sudden, you're like, okay, you start to second guess yourself, start to doubt yourself. And it's like, and now what to do? Well, if you find yourself in that position, use a hard stop. Just put a stop in there, walk away, don't look at it. Let it, if the stop takes you out, it takes you out. So be it. But that last trade influenced your decision this time, and you're starting to have that doubt. And then you change your trading plan. You do this, and you modify things based on the last trade, right? Or you get into a trade, it goes in your favor, it moves up a little bit, and it's like, woo, okay. And you take your profit before it gets to your target. And the next thing you know, it's at your target 2 days later. And you're like, and you're freaking out and you're mad because you got out too early, right? So the next time you get in a trade, guess what happens? You get in the same position, you're up a little bit, you're not to your target. And this time you're like, well, I'm not going to do what I did last time because I left a bunch of profit on the table. I'm going to get out, or I'm going to hold on. And now all of a sudden something happens, the stock drops and either hits your stop or drops worse than that. And now you're in this pickle. You're like, now you've got two different scenarios that you've experienced that are affecting your decision-making processes now. So the best thing you can do, I'm not getting ahead of myself, but is not let those things influence your decision-making, right? Fantasizing about what could have been will absolutely kill you mentally. It'll destroy your psyche. Okay. Short memory is great. That's what you want to have in trading, is a short memory. All right. Whew. It's coming back. We got to fight it again. The one thing when I think about with this is poker. I've played poker pretty much all my adult life. Since I turned 18, there was a little casino south of me. I've referred to this a lot too. But poker and trading are pretty much parallels, right? As far as how you approach the game, right? And the one thing that I know some people think, well, poker's gambling. Well, you're not technically playing against the house. You're playing against the other players. So it's not a, blackjack and all the other games, you're playing against the house. But one thing that I did with poker for years, and I still do it sometimes, right? Just like with trading. I did it for years too. You sit there and you look at your cards and you throw them away, and then the flop comes out. You're like, I had a deuce 7 offsuit. The 7-7 deuce comes. I would have had a full house. So you second guess your decisions all the time at the poker table. One thing I say, if you're familiar with poker, if you know how to play it, go use it as a way to improve your trading game as well. When you recognize that, it's basically the same things, right? You're sitting there, you don't know what's coming next. You get 2 cards. If we're talking about Texas Hold'em, of course, you get 2 cards. You don't know what's coming next, and you're playing against all these people. So you got to analyze it. You got to look at the situation, where you're at in position, how much is the bet? If you're playing tournament, are you playing a live game? There's lots of different variables, right? Just like in trading. So you got to analyze the situation, decide what to do with your starting hand, right? That's why I use patterns. In poker, you get patterns. You get a pair of aces. That's a good starting hand. If you're on the button, if you're the dealer, that's a great starting hand, right? It's the best you can get. But if you have something else, it's like, oh, what do I do with this? Where am I at? Depends on when you get to bet. Do you get to see everybody else's action ahead of you or not? So there's lots of variables. So you have to analyze the situation, decide what to do, and you have to make a decision. You don't have forever, right? So you decide what to do, and you either throw the cards away or you place a bet. And if you're going to place a bet, how much do I bet? There's a lot of strategy behind that too. Do I limp in? Do I want to keep a lot of people in the pot, or do I want to push them all out? There's so many different things and ways. Every situation is unique, right? Just like in trading. And then once you make a decision, you live with it, right? You either put your money in the pot or you don't. And you see what happens. And then the cards come out, and now you have something else to go on. And now things could get dramatically better, or they could get significantly worse. And you just don't know what's going to happen next. So you have to have a plan in your mind of how you're going to play this out, depending on what happens next and how things go. Trading's the same way. We find a pattern, right? We decide, okay, how much am I going to put at risk? Well, it's not a great hand. I've only got a pair of deuces. It's not a pair of aces. If I got a pair of aces, I'm going to bet big. I got a pair of deuces. That's not very strong. I'm going to bet a lot smaller. Position sizing in trading, right? If you got a nice pattern, you got something that you think is really strong, then yeah, go hog wild on it. Bet as much as you have, right? I mean, not bet as much as you have, but like I have a 10% rule, right? I don't put any more than 10% of my account in any one trade. So if I find something really good, if I got a pair of aces in front of me, I might put the whole 10% in. On occasion, if it's really spectacular, I might go 15. I usually don't. I usually stick to that rule, but sometimes, rules are flexible to a certain degree, right? But if I look at it and go, it's not that great. I got a pair of deuces. It's really not that great of a pattern. You got a little double bottom. The volume's not that great. I'm just going to do a couple contracts instead of 10 or whatever the number is, right? Maybe I'll put only 2% in, not 10%. So it all varies, right? Same thing in poker. But once you make your decision and you either place your bet or you throw your cards, you live with it, right? It is what it is. And it happens all the time at the poker table. You throw cards away, and then it's like, I would have had this killer hand. But you didn't know what was coming. You didn't know those 3 cards that were going to flop came out. Then you got 2 more to go, right? And you got betting rounds in between. So there was a lot of strategy, a lot of adapting, a lot of adjusting, a lot of analysis, all that stuff in poker, just like we do in trading. It's literally exactly the same. And one thing I've learned in the last several years in poker is that, and I find myself a lot of times I throw my cards away and I forget what I had. Completely forget what I even had. Now, there's other times where I don't, and then the flop comes out. Like I had last time I played when my dad was up a couple months ago, I had 10-7, and an 8-9 jack came out. It's like, I would have had a straight, right? Would have been a winning hand. But woulda, shoulda, coulda. And a 10-7 is junk, especially if it's offsuit. If it's suited, at least you have a flush possibility. Well, a decent one. But you didn't know that, right? You got to play the odds. Same thing in poker, right? 10-7 is junk. I throw it every time. I would never play it unless, there's the one-off situations, maybe. But I'm tossing it 99.9% of the time. And you know how many times out of 100 that's going to happen where I have a 10-7 and an 8-9 jack comes out where I flop the straight? Probably 1 in 1,000, maybe 1 in 5,000. So the odds are definitely not in my favor. But see, a lot of poker players get caught up in that, and the next time they get a 10-7, guess what they do? Oh, last time I got a 10-7, I would have flopped a straight. Well, yeah, you missed your 1 in 5,000 shot, buddy. Like, it's not going to happen this time. So the best thing you can do is have a short memory, right? I think one of the most important goals we should make as traders, I stopped years ago making financial goals because the money's going to be what it's going to be. The money that you make from trading will be a result of your skill set and how well you play your cards, if you will, right? So one of the most important aspects to trading is managing your emotional state, managing your the psyche, right? Just like here. We're talking about getting caught in the fairy tale. It's easy. And I still do it. Like I said, look at SMCI. If any of you that are in weekly whispers, I'm still complaining about that because I'm still watching it. But back, 6-8 months ago, it formed a head and shoulders pattern, and they just kept going sideways. It's around 300 or something like that. And then it breaks to the upside, right? Instead of breaking down on the head and shoulders, it broke to the upside. Well, it went from 300 to 1,200 in like 4 weeks. And I sit there and just like, because I remember thinking, well, what if this thing breaks up? It went through my mind. I think I went and looked at the options. If I remember right, they were about 10 or 15 bucks going out of the money, going long-term out of the money. Something like that, where I think there may be a big move. I think they were 10 or 15 bucks for the 5 or 600s when the stock was at 300 for 8 months or a year's time. And a month later, it's at 1,200. So even you buy the 600s, they're worth $600, right? You buy if you buy the 600s when the stock's at 300 and say you pay 20 bucks for it and it runs to 1,200, your $600 calls are now worth 600 bucks, right? And you paid 20 for them. What is that? 3,000% return? So 30,000, whatever. It's a lot. It's a $580 profit, right? And it's easy to get caught up in that mindset. You know, if you put $20,000 into it, you got $580,000 when it's all said and done. Those are once in a lifetime things that very few people, it's almost the same as hitting the lottery, because you don't know. First of all, to ride it all the way to the peak is highly unlikely, right? Most of you won't do that, right? Even if you get in, you got into 300, you bought the 600, it goes to 800, they're worth 200 bucks. What are you going to hang on and go, oh, I think it's going to 1,200 when there's nothing up there? There's no reason for it to, at least not technically, there's no reason for it to. So it's easy to get caught in that. And I do. And part of the reason is I met a gentleman years ago. I've told this story a few times where he got into Qualcomm. He showed up at his first workshop, set up an account like they said to before he showed up, so you can trade along with the instructor, right? He had threw $2,000 in this account. He broke all the rules. He bought a short-term out-of-the-money option because that's what he could afford. He wanted to do, he bought 15 contracts of this thing on Qualcomm when it was at 200 bucks or 250. And 6 weeks later, it ran all the way to 800. And he pretty much got pretty close to picking out the top. His little $2,000 trade was at $500,000 in 6 weeks. So he went from, I just started trading, I just threw $2,000 in an account, now I've got $500,000. It's literally like winning the lottery. That's a once in a lifetime thing that happens to very few people. It's just not, the odds are not in favor of it. But the sad reality is that he went and he turned that $500,000 into like 1.2, 1.3 million because he just kept doing what he's doing. And when you get into one of those crazy bullish runs like we had, part of that kind of like we've had in the last 6 months or so, to a certain degree, at least on certain stocks. Only certain stocks, though. That's what's hard about it. Back then, it was pretty much everything was doing that. But he was back begging to go to the technical analysis workshop free because he didn't bother to educate himself on how to read charts. He just kept doing what he was doing and kept making money. And then when the market crashed in 2000, he got blitzed, gave all his money back and then some. And he didn't bother to stash any for Uncle Sam either. So he had the IRS on his tail. He was trying to liquidate everything he had so he could get out of the hole that he had put himself in after he was living the high life for about a year. So how do you think his psyche was? It was destroyed. I don't know where he's at. That was 20 years ago when that happened, but who knows if he ever got back to trading again. If he did, I'm assuming he probably didn't, because that would wreck most people. So one of the most important things you can do is protect your psyche at all costs. And one thing I tell people is, look, if you have a stock and you're going to stop out of something and you say, here's where I'm stopping out, don't look at how much it's costing you financially. Don't look at how much money you're going to lose. Recognize that if you don't get out and it continues to get worse, that will do more damage to your psyche than it will to your account size. So protect that right there. It's the most important asset you have. The best thing you can do is learn to create a plan. I would hope you all do that. And the most important thing, stick to the plan. Don't deviate from it. If you got a good solid plan and the odds are in your favor, then in the end, you should come out ahead no matter what. Right? That's why I talk about risk reward so much. You get 3 to 1. You don't have to be right that often. So if you're right 30, 40% of the time and you're using 3 to 1 religiously, you should be ahead in the end over a series of at-bats, right? So just make sure you have a plan, stick to the plan. If the plan's not working If you're sticking to the plan and it's not working, then adjust the plan. You know, we all have to tweak, and you have to tweak it a little bit here and there. So there's always a little bit of adaptation to do, but you get your core plan, the core way you do things. And that's, you know, it took me a lot of years to get there, but finally got to a place where, okay, here's what I do. You know, I go through 300 to 400 charts looking for patterns, flag them. Those go into another list, something that I see real quick. And then I do a deeper analysis, start looking more at them, look at different candles, the volume, do a deeper analysis, and keep the ones that are the best. And you usually come down to about 20 or 30 candidates every week. And then that's all I watch for the week. I mean, something sometimes pops up here or there. If that happens, then I'm not going to ignore it. But for the most part, that's all I trade that week. I set up my plans on each of them, and then I just trade those plans. If they trigger an entry, boom. If they do, then I put a stop in, hard stop, let it go, and do its thing. So get into that routine. And again, most important thing you can do is protect your mindset. Any questions on any of that? We'll go spend the next little bit. Where'd my charts go? Just looking at charts. I'm trying to figure out what happened to my June 27th. I didn't do any yesterday. The market was closed. I thought about it and I was like, decided not to. I'm just gonna take a day off, relax, get some stuff done around the house. My brother's dog is here. He's gone. He's on vacation for a couple of weeks, so you won't see the cat. Sorry, Brenda. She probably will think she's up there. She's getting more comfortable. I got her on Monday. So she doesn't like her that much, but she is coming around a little more often and steering clear of her. She's figured out she could jump up on something, and Emma can't get up here. She's a dog, right? But she certainly jumped out of my car the other day. I was like, what? I was running to the store real quick, and I thought, well, I'll take her for a ride. She probably like a car ride, and I know she does. I rolled the window down, thinking she'd like the wind in her face. Well, I pulled out of the driveway of this Albertsons into the road. Right? It's a big 5-lane road. And she just goes bailing out the window. I'm like, what? I freaked out. So, and she's old. So, and my brother was like, well, she might die while we're gone. I'm like, I hope not. Not with me. At least get back first. So here I am. She just bailed out the window. I'm like, thinking she's going to die on my watch, but because of me, not because she's old. So I was freaking out. I ended up hauling tail around and getting in the parking lot, and I couldn't find her. I jumped out looking for her. I don't know where she was. I didn't want to get hit by a car. And then I turned around, and there's some the bus thing over there, and there's two people standing there, and she's right there. She came running over to me. She saw me and come running over to me. I'm like, I was mad. So she's been on my turd list for the last couple of days. Oh, I just saw that Trip. Yeah. Shoulder. Oh, shooting. I thought it said shouldering. I'm like, what is it? I'm trying to figure out what you said. Yeah, it's easy to do, huh? And you've been at this for a long time as well. I mean, we all do. It's just, it's human nature. It's not whether or not we do it. It's whether or not we can get it under control and not let it. The key is not to not do it. That's like people say, don't trade without emotion. Anytime anybody says that, it's like you've obviously either haven't traded or you don't know what the heck you're talking about. It's impossible. It's like saying live without emotion. It's impossible. You can't. You're going to get mad. You're going to get sad. You're going to have all, things happen. It's life. But to say that you're going to eliminate it completely, it's just impossible. You're not going to. Just like the woulda, shoulda, coulda thing. It's a matter of recognizing it, acknowledging it, and then catching yourself when you do it. And the main thing is not just catching it, but making sure that you don't cross that line from, okay, I see I'm doing this. I can't let it influence my next decision. That's the key, is separating out, going, okay, I can sit over here and fantasize, okay, as long as I fantasize over here and I keep it over here. But if I bring that fantasy into my next trade and analyzing my next trade and it's part of my plan, that's a problem. So you got to build a wall. You can have the fantasies over here. Nothing wrong with having those fantasies. But put a wall between that and your decision-making process over here, your analysis, your decision. Here's the separator. As long as the two don't mix, because they're oil and water, basically. They don't mix. You can't make good decisions, do good analysis, and create a good plan when you're over here in Fantasyland. So put a big giant brick wall there, however you have to. But all right. Any stocks you guys want to look at? Well, here. I already know this one. Right, Brenda? How come this isn't? Oh, it hasn't updated yet. There it is. Okay. Hughes is on another tear, which I don't know why. Meta's up 21 bucks right now. I'm not sure why. Nvidia got downgraded today, which was kind of a shocker. Tesla's now in the red. I think that was green. Yeah, it was green a little bit ago, but not by much. Yeah, I don't know why. Did Meta have some kind of news? They have earnings coming out on the 31st. They must have had some kind of news. I didn't see it. But I mean, you don't jump 24 points, 20 or 24 points without some kind of news coming out. I'm assuming they had something. Looking real quick to see. Clubhouse morning, Meta platforms. Yeah, I know I can see it's on high for record close. I understand that, but why? Elon Musk's X faces UE penalty warning for failing to control harmful content. There's a shocker, huh? Yeah, Apple's up 370 right now. Amazon's up 242. I just don't know why. I mean, well, here. I just don't know why Meta's up so much. Well, and there's part of the reason that the Qs are up so much. You got Apple, Amazon, Google's up 4, Meta's up 21, Microsoft's up 6. Nvidia is flat basically. Tesla's now down $1.21, so it's essentially flat. So you got 5 of the 7 of the Magnificent 7 that drive the SPX and the Nasdaq. I mean, they're what 28 or 38% of it, something like that. I can't remember which number it is, but either way, it's a massive percentage of those indexes. So whenever those ones are up, guess what? The index is up. That's one reason I'm still, even though we're still on this bullish tear for the most part. I mean, the Nasdaq and the SPX are. The Dow is still pretty much sideways. The Russell is still sideways. So you've got a very small group of stocks that are making the index look like everything's spectacular. And it's the at least for me in my life personally, the anecdotal evidence just gets bigger and bigger. I mean, my daughter was up this last weekend because my little sister got married, and she's doing hair. She's in cosmetology school, and so she works in a salon and goes to school for it. But even she works in a higher end salon, and even there, they she said, yeah, they're down about 50% as far as revenue goes, because people are cutting back on how much they're doing. They'll come in and just get, a haircut for 150 bucks. I don't know how you ladies do it. I paid 20 bucks. That's with tip. It's like, okay. But yeah, they're 120, 150 bucks for a haircut, but they're foregoing some of the other stuff that they would like to do that they used to do a year ago, but they're not doing it now. They're putting it off for a month or two. The coloring or highlights or whatever the heck you ladies do. I don't know. I just get mine cut like this pretty much every time. Got this nice Vietnamese lady that she does a good job. She always squeezes me in if she can, and quick and easy. 20 bucks. But what was there was something I was just thinking of I was going to say. I'm trying to figure out why Meta's up. Oh, the Elon Musk thing jogged my thought process, which it shouldn't go in. Well, it's not really politics. So my neighbor's a real estate agent. The other neighbor decided to sell their house. They found a house that they fell in love with. They weren't planning to move. They weren't planning to buy anything, but they found one that was perfect for them. So they threw an offer in it, not knowing if it would get accepted, and it did. So they started scrambling. She listed their house. Last week she goes, yeah, I had to take the little description they put for a house, right? She said, I had to take family out of there. I said, you're full of crap. She goes, no, I'm serious. I'll show you the email. She showed me the description of the house. It's just something about, this a room, family room, or not family room, but something. It's a great place to gather with family and friends. And she showed me the email from her manager of the office or whatever that says, you got to take the word family out. Don't get us in trouble with HUD. It's a HUD regulation. She said they have a list of 200 to 300 words that they can't use. The whole master thing, I heard about that, but family. And then she said, yeah, we have 200 or 300, a list of 200 or 300 words that they can't use, which is a wild violation of the First Amendment. You can't tell people what they can't. You can't use the word family. It's insane. Like, what do you, yeah, exactly. That's the word I use for it. It's insane. It's like, of course, anybody like talking to my parents and my parents' friends were at my sister's wedding, and they just looked at me like dumbfounded, like, what? Are you serious? Like, yeah. I mean, it's crazy. It's like, and that's our own government is literally violating our First Amendment rights by putting out these regulatory things of these words that you can and can't say. And if it was me, I'm glad I'm not her shoes, because if that was me, I would just give him a big old middle finger and say, we'll see at the Supreme Court. I mean, it's ridiculous. It's ridiculous when our own government that is violating our own constitution. So anyway, I don't get it, not into politics, but it's a constitutional thing and it's insanity. I don't think anybody would argue with that, saying that that's okay, because it's not. I mean, we in this industry, it's heavily regulated. There's certain things that I don't say, because that's why we only talk about practice trades, right? We don't talk about funded trades. We don't show funded trades. Even though, I mean, there's some people in this industry that have done it, and even though they were wildly transparent, they still get hit with fines, like multi-million-dollar fines, even though they're trying to be honest and transparent, saying, here's what I'm doing. It's ludicrous. It's so insane. The regulation has just gone crazy. Anyway, all right. it's a related person room. I don't know what they're calling it. That's what I came up with. Yeah, you can't have a family room anymore. You can have a living room until they outlaw the word living. And because, I mean, some people, I guess, I don't know. It's pure insanity. So I think he's doing more than rolling. I think he's not rolling over his grave. He's doing backflips in his grave. So it's crazy. It's absolutely crazy. I mean, you're entitled to your opinion. I don't care about that, but um, when you start infringing on other people's rights, that's a major problem for me. So I get a little fired up about it. So yeah, I don't know why Ben is up so much. Anybody? I was digging for news real quick, and then I saw the Elons, which got me all fired up. But yeah, I don't see any tech bull shares our top list. Okay, so what? Some analysts said that they think that Meta's, is that all it is? I don't know. I can't find any news on that, but okay, Brenda, there's the cues. You can see it's on a tear. I mean, if you're already bullish, then you're loving today, at least on those particular stocks that are going higher. Oh yeah, 1984. I actually have the audiobook. I haven't listened to it yet. I keep saying I'm going to, but I hear a ton of excerpts from it. So I should have read a long time ago, but yep, good old Orwell. Am I getting that right? 1984. That was his book, wasn't it? Am I remembering that right? I think it was. Okay, that's what I thought. That's why I'm sucking down the coffee, because I'm still a little tired from last night. I was up late and had to get up early this morning, but so trying to keep the brain firing off. But now the coffee's gone, so I think it'll last me 20 more minutes. Yep. Well, there's Idiocracy. I heard somebody refer to that. I had that movie for a long time. I just hadn't watched it. I finally watched it about 6 or 8 months ago. I heard somebody refer to it the other day. It's like, that's where we're at now. I think we're getting closer. If you haven't seen that movie, go check it out. It's hilarious. Yeah, exactly, Steve. I know, Brenda. There's nothing to talk about here. I mean, you got 3 big bullish days. The odds are it's not going to keep going. It's probably going to slow down, at least have a pullback. I mean, it could keep running, but like I say, if you're already in a position on the Qs or on a stock that is heavily up, then you're happy. Would I be shaving some profits off of it right now? Yeah, absolutely. Depending on what it's doing and where it's at and what your analysis looks like. But the odds of this thing continuing to just run like this is pretty slim. I mean, when you look historically, this is one thing I like to do too, is when you're trying to figure out like when's this run going to end, well, we don't really truly know, but you can go look historically at some of these other runs, and I'm trying to figure out where's the okay. Let's take this as the launching point. Yeah, exactly. So I'm just going to look at the Qs because the spiders is pretty much the same because you got the SPX and the NASDAQ are pretty much, that's interesting. Those are pretty much the same. Same types of move, right? You got this one way back here. Well, that's the COVID crash. So this could be seen as an anomaly pretty easily because you got a big giant crash. If things, well, there's the other crazy part is look at, and this is why I have this drawing thing on here so I can look at it so you can see it percentage wise and see how long it is. There's 30% over 98 bars. This is 119 bars, goes 80%, which again, that's an anomaly, right? You got the COVID crash in there. Things get blitzed for a little bit. So this one I wouldn't really look at, but I'm going to take that off. So 98 bars, and this is daily. Okay, so 98 days, that's 5 months almost, about 4.5 to 5 months, somewhere in there. He's got 5 trading days a week, right? So 98 bars is 98 days. 21, 22 days per trading month. So 105, that's basically 5 months, goes 30%. Here we got 88 bars. That's again 4 to 4.5 months, 35%. This one's 29%. So if we do another one from where we're at now to where we're at, and that's why I look at it on a percentage basis, because that's the more accurate way to see. So we're at 20% on 45 bars. So if we repeat these last 2 runs, then we've still got, about 40 bars to go, about 40 days to go, and another 15 to 20%. 10%. Yeah. I guess that's 10% to here, 15% to here. So 10 to 15% more upside is possible. I guess that's probably a little bit low, but if it repeats what it's done the last 2 times, right? And that's a big if, right? It's like we don't have a crystal ball. We don't know what's going to happen, but it's not uncommon for them to follow the pattern. So I guess the question would be, where is that at? I don't think we have it far enough out, but 26, 27%. There's 28. Let's put it like 31, 32, kind of right in the middle. Not going to be able to get the days of, as far as bars go, but there's 31. That's pretty close. That's kind of in the middle of these two. If that's where it lands, then yeah, we're looking at about 550 or so. Again, that's a big if. So whether it happens, remains to be seen. So yeah, stupid thing won't stop blowing up. What's going on? So yeah, hopefully that helps, Brenda. I'm going to get rid of that because it'll clutter it up. AMD, was that? That's not today. No, that's not today. I was like, wait a minute. I thought you said it was up. Where's your cat? I told you already the cat's probably not going to come. She has actually, since yesterday, started to get used to Emma now. Emma's a small dog. You won't see her. She can't jump up here. she's kind of I think she's got some schnauzer in her. My brother doesn't even know what she is. She's a mutt. They got her to pound like, I don't know, 10, 15 years ago or something like that. I hate saying they rescued him. It's like, you didn't rescue a dog. You only got a dog for free, which is cool. I mean, hey, I'm all for it. I just don't. That word rubs me the wrong way. I think we should have them outlawed. So you can't use the word rescue anymore. That's all. Jim Gaffigan did a bit on that about rescuing people, rescuing a dog. It's like, and I went in and rescued a pizza. It's funny. Sounds more like my style. I'd rather rescue a pizza. Well, looking at AMD real quick. I heard these guys have a better chip than NVIDIA is what I've heard. They came out with a new one that supposedly is supposed to be superior. I don't know if that's true or not, but. Oh, really, Trip? Oh, yeah. See, that's something I've never done. Maybe that's why. Maybe I haven't seen it firsthand, but. That's not what I wanted. No, no, like I say, opposed to it. It's not opposed to rescuing animals. It's to me for it comes across as virtuous. Like, look at how good I am because I rescued a dog. If you truly rescue a dog, cool. I'm all for that. I'm the kind of guy I like to lay low. I don't go out and shout from the rooftops. Look what I did. That's just not my style. So I'll rescue a dog, but I got a dog. That's all I got. I'm not gonna tell people that I rescued it, if that makes sense. So, oh wow, big old push of the bands. They're flaring out big time. So this looks super bullish at this point. Will it continually break out? We'll see. Volume's pretty solid so far. I kept looking at the volume this morning. I was like, man, the volume was light. Oh, that's right. We had a half day on Thursday. So, but yeah, it is. It's as long as it stays above that resistance line, then this thing looks pretty solid. And little ascending triangle there. It's just a little high, but that's all right. I wouldn't be surprised if this thing, especially if it breaks out, continues this heavily today because we're what? I guess we're at halfway through the day, but we're still at 37 million. The average is at 47. Yeah, this is going to have, unless the volume dries up in the next hour or two, which isn't likely, it'll probably continue. Then, yeah, there's a decent likelihood this thing going back to 200, possibly challenging the highs there about 215. So looks bullish. Looks very bullish at this point. So yeah, exactly. Yeah. Well, if you haven't noticed, I usually don't do that here. I very rarely toot my own horn. That's because I know that trading I mean, it, there's a certain set of skills that you have to figure out what might happen next. But in reality, it's just a flip of a coin. You don't know. We don't know what's going to happen. There's no crystal ball. We can't say, oh, AMD's in an ascending triangle. It's breaking out. I know it's going to 200. No, you don't. So I say, I don't know if it's going to 200. It looks like it wants to right now, but we see false breakouts all the time. So, I mean, you got one. I guess if you would have done that here, back here, you got a breakout, right? Back April. And then it fell back for a couple days and went sideways for a month before it took off. So we never ever know. So, yeah, I'm with you, Trip. I know. I am too. I mean, I wouldn't say animals are my passion, but I like animals. I have fun with them. I got a cat. I'd have a dog if I had more time. I just don't. I'd have a farm with a bunch. The place we went last night, my neighbors have friends that live out in the country, and they're like, oh, his wife's not a huge fan of animals. Um, He's like, oh, get ready for the five dogs. Like, what? They have five dogs? Well, yeah, they have two dogs. Their kids have two dogs, and then I think her sister was there, and she had a dog. So there's five dogs running around the whole day. So, and they're all coming by me and trying to eat my food, and I was petting them. Had a couple of them just sit next to me because I kept petting them. So I know I do. I love animals. Again, it's the virtue signaling thing that I don't like. But was there something else that oh yeah, that is the I'm glad you said that actually. I was thinking that earlier. So this is my I gotta make this bigger. This is my little index chart that I keep up so I can see very at a quick glance, I can see what the index are doing. It's just small up here on my other screen. But the left-hand side is all 5-minute charts, but on the right side those are all the daily charts, and they are a little bit squished. I'm not sure why I have that one so much bigger. I don't know if that was accidental or what, but the Russell. Of course, if you know me, I talk a lot about the Russell, and that's I'm glad you refreshed my memory on that trip because yeah, the Russell, you can see that's not yeah, that's too squished to do that. Oh, I'm gonna break something here in a minute if I'm not careful. Trying to, there we go. I'm actually going to put that back up. Leave it there. We'll look at it separately on the, those are just too squished and too small. I have a watch list for top-down analysis, so I just have the major indexes here. So there's the SPX, right? That's not today yet. It hasn't updated. Come on, did it go? That may not. They have recently, it seemed like, or maybe it's just the NASDAQ that does. That's why I have the ETFs in here, actually. There's the Russell. These aren't updated, so we'll look at the ETFs. So the spiders, there's the ETF. That should update in a second here. And this will give us, you know, the volume stuff on the SPX, the indexes themselves don't necessarily update that well, but the ETFs do, and they're pretty similar for the most part. There's not much variation. Yeah, me too, Trev. I want a mini farm. That's why I'm a little jealous. My neighbors are getting 8 acres. The house, it's got a super old manufactured home, but it's all built out for that. So they could just replace that at some point. It's got a big barn, big fenced area. They've got 2 dogs. So I'd get me some cows and chickens and pigs and make me some bacon and some ribeyes and eggs. Sounds good. But that thank you, Les. Exactly. No family room. You can't have a family there. You can have related people, but you can't have a family. So I'm glad you guys are having fun with me. That's good. So there's the spiders going up, right? And then we've got the Qs, which is going up even more. That's already updated. The Dow, there's the diamonds. That has not quite updated yet. Let's leave that there for a second and come back to the, which you can see, right? If we go out a little bit longer term, we're kind of sort of in the beginnings of a head and shoulders on the Dow. If it doesn't go higher and break out and make new highs, then we have a head and shoulders. That's a little steeper than I like. But same thing on the Russell. There's the Russell. We have, you know, it's basically in the head and shoulders as well. It's not super pretty. Neither one of them are that pretty, but you can see they're going sideways while you got the Qs and the NASDAQ breaking out to new highs and still going higher. So what's up with that? It's definitely a red flag. And it's been doing this for a month or two now. And towards the end of 21, it did this for about 2 or 3 or 4 months before 22, things started to head south when the economy started to get bad. And then when everybody got all excited because Powell's going to cut rates, then the market went crazy to the upside. I don't think that, I mean, some things are better, some things are worse. The AI stuff also has kicked in. I just heard somebody else the other day on CNBC, I think it was not yesterday, but the day before, somebody else talking about the AI boom that we've had and that it's overdone and that it's similar to, she must have been listening to me. Talk about virtue signaling. No, it's just funny that what she said was exactly what I've thought. And I've been saying for a while. So I think it's a lot like she compared it to the dot-com bubble. And dot-com definitely has changed our life, but it wasn't in the late 90s. It wasn't to the point where investors got too far ahead of themselves, right? She said they got out over their skis too far. And it looks like AI is the same thing. People are all excited about it, jacked up about it, but is it really, in certain areas, it's spectacular. In other areas, it's not there yet. I think some of the big impacts it's going to have will come 5, 10, 15, 20 years from now. They're not going to happen right away, but we'll see. I mean, you never know. And a lot of the big companies that have deep pockets like Microsoft and they're the ones who are investing in it. They're the ones driving it. But the little mom and pop shops, the average Joes, which is what the Russell represents, right? They don't have the capital. They don't have the billions of dollars of cash sitting there saying, let me invest in all these machines that are going to make my business better. It's going to take time to get down to the little guys. So, and you can see, I mean, the Russell's still not doing that well. It's just dancing around 200, 2000 is what the index is at. So, and you can see, I mean, here's, right. So you had the COVID crash. Get rid of that if it'll, yeah. So there's the COVID crash. And then we bounced back just like the other indexes did. Russell went crazy there for a few months. But then what you'll see is this is pretty much all of 21. It just went sideways. And then it had this false breakout, rolled back down. And then there you had 22 where it sold off. And then it is essentially just gone sideways. I mean, see, it's essentially stuck between this 2,100 and there, and realistically, it's about 2,000. It was stuck in this range since early 22 to late 23. And the little guys are the ones who I remember hearing this in 2000 or 2001, because I got started in 2000, right at the peak of the bubble. And one thing that I learned from that experience was that people kept saying, which is true, that the little guys, the small businesses are the ones that bring us out of recession. They employ 80 or 85% and 90% of people in this country, small business, 5 to 500 people. I mean, little small businesses that have 5 to 500 employees. They employ 85 or so percent of the entire country. So when they're doing well, the economy's doing well. When they're doing bad, the economy's doing bad. Well, if they're the ones that bring us out of recession, then the inverse of that is also true. They take us into recession. And you can see just by looking at this chart, after the COVID rally, the small businesses have not been doing that well. It's only the big boys that keep the major markets, the SPX and the NASDAQ, because of tech, right? Tech has, the AI thing has kept the SPX and the NASDAQ running, going to new highs. The Dow, though, as you saw, is, where'd the diamonds go? Is slowing down. And it's not normal to have all 4 major markets going different directions. They typically are all, if we're in a good economy and things are solid, then they're all going the same direction at the same time. So to have this divergence is not normal. And that's one reason I'm still over the next year or two, I'm still bearish on the overall market. So, yeah, exactly. Exactly, Brenda. So, but we'll see. I mean, things could change. Something, policy could change. Something could happen that changes things. And again, none of us have a crystal ball. But looking at the charts, it's a big giant red flag, if you will. This is one reason the Russell being where it is and how it's stalled out and it hasn't really done anything. It's one reason I'm still overall bearish on the economy. I think that we're headed for some headwinds. We're already in a headwind as far as I'm concerned. It's blowing against us in a lot of ways. It's just the big boys out in the aircraft carriers. They're still out in the ocean because they can, because they're giant. They can withstand a storm. So little guys in the rowboat, the small fishing vessels that have run for shore. So whatever metaphor you want to use. But anyway, any questions real quick on that? Now that I opened a few cans of worms. We have got to wrap here. So I want to make sure we answer any questions that you may or may not have. I didn't miss anything, did I? Oh, interesting. It's a stock picker's market, let's put it that way. You're going to have some stocks that are going crazy bullish north, and there's some that are a lot of the food industry. Like I was seeing Kraft Heinz, well, it's basically sideways. A lot of these stocks, there's a lot of stocks that are in bear territory. They're in bearish moves. So it is definitely a picker's market. So keep your stops tight, protect your downside. Most importantly, protect your psyche. Keep your head straight. So, all right, I don't see any other questions, so we are going to call it a day. We'll see you. I think I'm up trade you next week, if I remember right. Maybe it's the week after, but I think it's next week. So, all right, you're welcome. Thanks for hanging out. So, yeah, happy trading. Exactly. So, all right, y'all have a great weekend. We'll see you on the next time around. God bless. Bye-bye.